Hi everyone, a very short update here on the 15-minute time frame. What you see on my screen is a 5-wave diagonal structure in a wave 1 or A. We look for a 3-wave corrective structure and then continuation to the upside, either in a wave C or continuation in a wave 3. Now you can see that this move to the downside here can be counted as a zigzag, a wave A 3-wave B, and then a 1, 2, 3, 4, 5-wave structure to the downside in a wave C, which increases the probabilities for price to take out this high. However, we can also see that this low here is made before the 0.382 fib time, and the 0.382 fib time is taken from the start to the end of wave 1 or A, comparing this structure in time with your 2 or B in time. Now it is most common for a wave 2 or a wave B to finish after the 0.382, so therefore we preferably get a bigger corrective structure. Now as price has retraced the first zigzag here to the downside by at least the 0.7 Fibonacci, it significantly reduces the probabilities for a double zigzag in a W, a wave X, and then another zigzag to the downside in a wave Y. Instead, the two patterns, or the two structures I should say, that you should keep an eye on is a flat structure, a wave A, B, and then a wave C, and then you look for price to move towards the upside. Now, for a flat structure, the minimum target for your wave B would be the 0.9 at 103.4K, and a potential sideways WXY. So a sideways corrective structure, wave W is a zigzag, then you have a wave X, and then we need a wave Y. And because wave W is a zigzag, wave Y can only be a flat structure, A, B, C. And then we move up, or a triangle structure, A, B, C, D, E, and then eventually continuation towards the upside. Now the most important support to the downside is in confluence with the 786 Fibonacci, taken from the low to the high of wave 1 or A, which is the daily naked point of control at 99. And to the upside, we have two blue boxes here, two areas of resistance. Around 105K, we have some resistance. The weekly naked point of control sits in that area. And then just above, we have this blue box, 106.2 to 106.5K. And that is basically just the value area high of the range that we have over here. So you can see this value area high, this blue line in confluence with that blue box. Also, if you take another one, you can see it more clearly. So the value area high in that area, basically the only resistance really that I have in that area, but it is in confluence with the most common target area for a wave C, for a potential A, B, and then a wave C to the upside, which is the 1 to the 1.236 area, 106.2K to 107.7K. The 1.618, also still a wave C target. However, if you move beyond the 1.618, the probability significantly increase that you're looking at a wave 3 and not a wave C. Now, what is interesting here is that you can see that the common target area for your wave C at the moment is above the 105 weekly naked point of control. Anything below the 1-to-1 over here generally is a rare target for a wave C. Of course, if price would move here to the downside and correct longer and maybe hits the daily naked point of control, then the target area will move down. And if we would hit the daily naked point of control, then you can see that the 1-to-1 extension is right on top of the weekly naked point of control. And the 1.236 target is in confluence with the other blue box. So that is quite interesting. And something else that I like to show you is that if we do see a flat structure in potentially this 2 or B, right? Then the most common target area for a flat is the 1.236 to the 1.38 Fibonacci area here. And you can see that it is in confluence with the weekly naked point of control, right? So it remains an area of interest, that is for sure. But from an Elliott wave probability perspective, the probabilities for this scenario are higher than any bearish scenario at the moment. The bearish scenario would be that this is a three-wave structure and you're going to be looking for a diagonal to the downside, where this ABC is a wave 1. You then have a wave 2. You look for a wave 3, 4, and then eventually a wave 5 to the downside. Then you get a correction and a continuation. But it is too early to talk about a diagonal, right? So therefore, the bullish scenario will always have higher probabilities than the bearish scenario that I have just shown. And also from an Elliott wave probability standpoint, preferably your wave 2 or B is not yet finished, because this ABC over here ended before the 0.382. So therefore, we have to be aware of the potential of a flat structure here, as well as the potential of a WXY sideways structure before continuation to the upside. Now, with regards to the news, we do have some news tonight, so make sure you trade safe. Wednesday around 8 p.m., 8:30 p.m. Central European time. So again, trade safe around that hour. It can increase the volatility on the chart. And with regards to CVD divergences, well, we have still some bullish CVD divergences here. The target is taking out this high, and on a 15-minute time frame, we actually had the bullish CVD divergences here playing out. You can see that price moved up, a little bit of bullish CVD, a little bit of bullish CVD here as well, and now we made a high, and there's some more bullish CVD. Though this one I'm not too interested in, because you can see that this low here already had bullish CVDs that have played out. And the best CVD divergence is a CVD divergence that is formed for the first time with a certain pivot high or pivot low, meaning these here, that's the best, right? Now that this low already had bullish CVDs that played out, this green line for me is simply less interesting, and I am more interested in what happens on the right side of the recent high here. And you can see that we have a bit of bearish CVDs here that played out, and locally here a little bit of bearish CVD that also played out. So it can potentially support that continuation of the range to get a bit of a longer 2 or B. So that is what I wanted to say. Probability is higher for this scenario here. We know the resistance, we know the support, we know the impact of time. And yeah, let's see what price is going to give us. So I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.